Steve Morrow. Let me know if you can hear my voice and see my screen. All right, good enough. Nice to see everybody. All right, got a lot of stuff to cover tonight, as usual. See if I can get through it all. All right, I'm going to skip all this motivation stuff. You guys know what to do. You're supposed to know what to do anyway. 12-week year, you new guys need to get this in the audio form, map out a 12-week structure. We are halfway through the first quarter of 2022, but if you're just starting, you map out 12 weeks from today, from Monday, or from the upcoming Monday, and you follow a 12-week progression. That's it. Simple. All right, I asked you guys about this. I got a little bit of feedback, but I want to know where you are, right? We're halfway. I'll mark it on the calendar. But if you're struggling, you should be doing your personality test. You got to do stuff that plays to your personality, or you're going to be miserable and you'll end up not doing it. All right, I don't care if it's marking charts or working out. You got to do something you enjoy. If you think you're supposed to lift weights, but you like to get outside and run and walk in fresh air, then you need to do that if that's what makes you feel good. Don't go against what feels right to you. You won't be able to sustain it, man. It's going to be forced and you're going to be miserable. All right, I'll just leave it at that. All right, here we are. So January's gone and February's halfway there, right? Hope you guys had a nice Valentine's Day, by the way. We're right here. Right, this week's gone. So here we are, man. Literally the middle of the quarter. So as many weeks are behind us or is in front of us, you should have some target looking for April 1st, some kind of plan. Okay, if it's marking charts, if it's doing the homework assignments, if it's running the assessment, 30 trade assessment, it should take you about a month, depending on how aggressive you are. All right, simple stuff, man, but you just got to do it. That's the thing. Is like, where do you begin? You begin at the beginning, right here. You start today. Okay, you screwed around. It's February. You realize that, oh man, it's Valentine's Day. I haven't done shit yet, right? There was I don't know what it was, a meme, or my wife told me something. People were passing around. It said something like, January and February were practice months. I'll roll up my sleeves March 1st. Okay, well, it's kind of funny, but it's crazy that 60 days are going to elapse before you get going. All right, I know you guys get tired of hearing this stuff and just want to look at charts with me. I understand all that, but this is part of it. The problem is, it's not. If the business was about reading charts, then everybody would be successful. There's more to it. It's multifaceted. All right. So we're going to pick up. We're going to look at the charts, talk about the POC drill, some bookmap stuff, and I got those videos I've been talking about, how they pull the liquidity. We'll look at those tonight if we can get to them. All right. So somebody sent this slide in. Hey, Chris, happy to see you, brother. All right. So look. I want you to screen capture this next slide. I want you to print it out and post it in your face. Post it on your bathroom mirror, post it in your office, post it on the screen monitor of your desk, and flip it out of your way before you take a trade. All right, you got to ask yourself, are you here for the long haul? I've been at this 22 years. 22 years. Okay, you got to ask yourself, are you a lifer, or is this a hobby for you? Is this something that's going to pass? Or are you screwing around treating it like it's a joke? Because it's no joke. Most of these bullets were discussed with me 20 years ago in the upcoming slide. All right, and I'm actually amazed and humbled at the same time that the principles have withstood the test of time with all the advances in technology and all these people with these apps and this bullshit and their phone and all this stuff. These principles have remained constant. So you got to ask yourself, you're going against this stuff. How can you be different? What can you do better? All right, let's look at these. So this is one of the funding agencies that's out there. Maybe some of you guys have seen this, but this was submitted to me and I think it's pretty awesome. So of all the clients that they have at this funding agency, this is the statistics that they compiled against traders and what's going on in the background, the stuff no one sees. So the first statement, over 60% of traders in our database do not use a stop loss and have a high risk of ruin. You know, I'm totally against that. But let's talk about how they get there. That's the question. How does somebody get there, right? So Most traders don't really know what they're looking at. They don't understand the dealer and the market moves, and they chase momentum type trades, right? They see a breakout candle, they chase it, right? They usually get involved maybe in L2 because they're waiting for multiple confirmations for price to get in a spot where they think it's going to keep going, and lo and behold, it pulls back enough, takes out their stop. They're trying to be conservative, 15, 20 pip stop, 30 pip stop. They're using some rational number. They hang around, look at the charts, right? Aggravated when they get triggered. And then the next 15 minutes or so, pricing goes in their direction, and they feel cheated inside, pissed off, mad at the dealers, whatever, mad at the broker. Oh, this market's crazy, whatever the excuse is, man. Then the bright idea hits them, right? If I didn't get stopped out right now, I'd be up big. Why do I need one of those? Okay, what happens over time is, look at the number, 60% of traders don't use a stop. Most of the people aren't using stops, and they get their orders dragged against them, and they start scaling in, and then it becomes a catastrophe. I don't know, some of you that have been around a little while, last year I showed a chart of a guy that had a $10,000 account and he had 20 lots open, and he was in big trouble. He was about to get flashed out. How do you get out of that? He asked me, how do I get out of this? Right? You can't dial 911. But here's the deal. You either got to add more equity or don't do stupid stuff. That's the bottom line. If he doesn't have the money to add into the account to keep it afloat, don't do stupid stuff, man. Right? There's a joke going around. I think it actually originated from Lithia, Florida. If you want to be stupid, you got to be tough, man. All right, let me go back to this chart. The traders who have made it to their fourth pay cycle, that means 4 paychecks. 4 paychecks, approximately 4 months. Right? The profitable traders are in the market less than 4 hours a day. Yes, you get your session times. Okay, you guys know my schedule, man. In the office by 1 is because I got to answer your stuff and go through, put the slides together for the following week, but I'm looking for stuff coming into London Open. End of Asia, going into London, looking for a setup, and I'm done by 6. I'm looking at a 3 to 4 hour window max, and I've been doing that for 20 years. Okay, a trader who holds trades over the weekend. How many times have I said don't hold shit over the weekend? If I said it once, I said it 1 million, 10 million times. You can't predict the volatility over the weekend. You don't know what world events are going to unfold. We're talking about war with Russia. They seem to be backing down right now, but that's the kind of stuff. I agree, Sean. Sean just said this stuff is so valuable. This is the kind of stuff that gets you in trouble because you're going to like, what the hell does Steve know? I got 22 years experience in this shit, man. That's what I know. A lot of you don't even have 22 days, 22 months. And I don't mean it as an insult. That's why you're here. So when I tell you don't hold a trade over the weekend, it's from experience. All right, so a trader who holds trades over the weekend has a 60%, he wrote higher chance of failing or losing their account. Yes, because if war breaks out and you're in oil longs or oil shorts and price goes against you, it's going to gap huge by the time your dealer opens. The gap comes from your dealer being closed. If the market opens at 4 o'clock and your dealer doesn't open until 7 and price drops 200 pips, he opens with a massive gap and you get called out. Price might retrace later, but it's too late. There's so many factors about holding over the weekend, I can't even explain them all. But a lot of it has to do with when the market opens, when your dealer opens, the available margin, liquidity levels are thin on Sunday, so the price is very volatile. War can break out, political stuff. I could go on all day. Well, you got to be, say, geopolitical, like I know what I'm talking about. It's just stuff can happen, man. Shit happens in the business. And holding a trade over the weekend is just a stupid move. Flat on Fridays. When I go to bed Friday morning, which is my Thursday night, flat. I don't leave stuff open. All right, here's the one that's important. When the market is more volatile, more traders fail because of lack of risk management and discipline. The next one goes hand in hand with it. If volatility is prolonged, it is a bloodbath of epic proportions. What does that mean? People lose their accounts, they get called out, they over leverage. Okay, right off the top of your head, how do you prevent that? How do you prevent that? Those 3 bullets are priceless. Throw some ideas at me. Text in there. Come on, man. Give me some love. Yep, scaled risk. Well, not necessarily scaled. Chris, I know you haven't been around. I don't know what you've heard or not heard of my stuff. Yep, don't trade news, all those things. But here's what I was looking for. You have a max daily loss limit for the day. Yep, clean setups, you're right. Max, what's your max daily loss limit? I've been saying this for years. You have to have a max drawdown. If you hit that, you're out. How could it turn into a bloodbath if you hit 2% and you're done? How could it be? If you have a max risk of 2% and you hit 2%, what's the blood? That's a typical loss day. You're out. Remember, I talk about win the day, not win the trade. If you're using a 3-trade model, using a 5-trade model, your risk should be 2% max. When you hit 2%, you close the shit off and you go to bed, or you stay up wherever you're from. You go for a walk. Okay, listen to this. This number is like unbelievable. There are 5 traders who are on their 8th payout on evaluation in live accounts. 5 traders. I don't know how many guys are in the company, but I know the company is relatively big. 5 guys made it to their 8th payout. That's disgusting. That means that the other percentage of people are busting. Right? Listen to this. All of them trade conservatively and make sure they get paid. None of them risk more than 2% per trading day, and they stop when they've reached 4 to 8% in profit. Okay, now here's the thing. They stop when they made their profit so they can get their pay cycle. But listen to this. Here's the deal. Helene, I don't know what's real of this. It's a percentage of their people in their account. They might have 5,000 clients. So out of 5,000 people, yeah. These are their numbers. They were given to me by a reliable source, man. Period. All right. So what does that tell you? Okay, money management, your max daily loss for the day, and you're winning the day, not the trade. You don't need to win every trade. You need to win a 3-trade cycle or a 5-trade cycle or whatever model you built after we talked about that. I'm not promoting the company, Eugene. It doesn't matter. The numbers are the numbers. I'm not going to say where it came from. It was given to me, and that's all that matters. All right. So listen. The guys that are successful trade conservatively. They have a max drawdown risk every day, and they have a max gain every day. The problem is with this business, it's a feel-good business because it's money. When you start making money, when you hit 4 or 8%, you don't want to end it, and you go, oh, I'm feeling great today, I'll keep trading. The problem is with that is like trade degradation. Okay, so here's what happens. As the day wears on, the setups start to degrade and price comes into its normal traditional cycle. So if you take peak formation high, book flip, tap back into the level, apex nadery thing, that's your setup. Okay, you're going to get one of those a day and maybe the other one on the other side, but you shouldn't be standing around for 4 to 6 hours waiting for the other side. That trade is your trade, and then the second push through, and that's it. Those are your trades. If you hang around because you made your 8% and it was too easy today, too easy, quote unquote, right? But easy is you're supposed to make it look easy. It's not easy. What goes behind that trade of looking easy is 22 years of experience, 10 years of charting, 20 years of whatever. You understand? You guys have the same experience. Maybe you've been at it 5 years, 7 years. So when you make something look easy, it's because you're an expert at it and you've been doing it for 7 years or 6 years or whatever your number is. It's not really easy, right? You have to understand a lot to get to the point where you're pulling a check. And to sustain an account and a business for 20 plus years and relationships with brokers for an exorbitant amount of time takes patience and discipline. The thing is, I was a young man when I started this business, a lot younger than I am today. And I was in a paramilitary organization. You guys know I was a fireman. I've said it a million times. So when at a certain age, people tell you something and you take it for what it's worth. My mentor told me this is what you do. You don't hold trades on the weekend. I never questioned it. I didn't say like, dude, why can't I hold a trade on the weekend, man? I didn't say that. But in today's social media and back talk society, nobody just listens. Everyone's got their own idea, and that's okay, man. You're allowed to be a free thinker. But if someone's telling you The guy that told me was a master. His job was to take money from every one of us. And he's telling me don't hold trades on the weekend. It's a sucker's play. Okay, man, that makes sense. I never said, well, why? What do you know? Who the hell are you to tell me not to hold something over the weekend? I never questioned it. The guy told me never take more than 2% risk. I take 2% risk. 2%, oh, well, I have a small account. Take your numbers and put them in the spreadsheet that I talked about for the last 20 years with you guys, or 10 years since I've been teaching. The spreadsheet will equal everything out if you follow it. 2% risk following the spreadsheet is going to get you where you need to get on any account. I know there's some people that trade more than that in the group because, oh, I got a small account, I got to scale it. Okay, good luck with that. There's a reason that these numbers hold true. These numbers were given to me 22 plus years ago, and they're still valid today, and I'm surprised by that. At the same time, like I said, I'm humbled by it. They must work, right? They must be part of every trade manager, money manager's plan. So if you're heading in that direction, make it part of your plan. Okay, this last couple of ones are crazy, man. All traders who receive record payouts have lost their accounts within 3 weeks of the record payout due to excessive risk. Why? Why would anyone do that? An immature behavior, maybe never had any real money, started to make real money. It's so many factors in personality. Yes, they get cocky, they get full of themselves. Thank you, Helena. It's just one of those things. It's like you're dealing with money. So if you come from modest or middle class means, and I don't mean any disrespect, you guys know I was poor growing up. If you come from modest means and you start seeing the money, it's easy to get cocky and full of yourself and then lift your stop and over leverage and go, oh man, I made $25,000 last week. Surely I could do 50 or 100, right? Because it's just lot sizes. But you get away from the 2%, you get away from using your stops. All the things that are listed in this sheet come into play. Listen, take a picture of this, post it. Next time Friday rolls around and you're up like 10, 15 pips and you want to hold it over the weekend, read the bullet, man. Yes, greed takes over. There's a million factors, man. Everyone's personality is different. They see things a certain way. People make promises to their families that they're going to do things. Their wife gets frustrated with them for being at the business for months and not seeing any significant profit. It's a tough business. There's no argument about it. But I promise you, you're in the right place. I'm trying to help you avoid these things. It's my job to help you avoid this type of stuff. And it starts with sheets just like this, because these are the exact things that were told to me 20 plus years ago. For what it's worth, man. And the guys that have been around me a long time know I don't hold trades on the weekend. And you know that I pretty much follow the 2%. It's in the spreadsheet. The spreadsheet is built in with 2% automatic when you load it. And everybody changes it, man, because they send them back to me with 5%, 7%, and it freaks me out. But if you don't know what the spreadsheet is, you need to get it in the group. It's in there. All right. Every time I say this, I create a support nightmare. All right. So anyway, for what it's worth, let's get into the charts, man. I hope this helped you in some way. I hope you see that I'm not so crazy after all. It's good sound setup, taking the setups early in the session when they're the most viable. Don't chase stuff towards the end of the session because you lost and you get frustrated. Don't trade without a stop. Don't get into excessive drawdown. I mean, have a daily cap. How many times? All right, last thing on this sheet, and then I'll shut my mouth about it. All right, so listen. How many times have you got yourself into something going? You're having a good day, and all of a sudden you start getting chopped because you showed up at 2 o'clock, you traded the session, and then by 4 or 5 o'clock, you start having problems. You start getting chopped up. Then instead of going to bed like you were supposed to, you hang around for the US session, and it's a totally different animal. It happens to a lot of people. You keep adding trades, you're in a drawdown position, you start doing stuff. And all you had to do was walk away, and then you come back the next day and it prints out perfect. The day after that, it prints out perfect. But because you sat there and forced yourself to try to get out of something because you were caught up in the moment and you kept pulling the trigger, right? Had you just walked away at your 2% loss and came back the next day, There were 6 or 7 fantastic setups. All G pairs conformed. All G pairs 50 bounced perfectly. But because you had to blow your account on Wednesday because you don't understand there's a midweek reversal or you lost track of where you were in the cycle and level 2 chopped the shit out of you, 50% pullback, hit your stops 3 times because you kept shorting it or longing it, right? And then you come back Thursday and there's 10 perfect M's and W setups. You could have had your pick. Everyone paid out. That's the business. It's on purpose. They're playing against your emotions, right? Is there a midweek reversal every Wednesday? No, it's Tuesday, it's Friday, it's Thursday. But it's 2 or 3 days into a reversal, 2 or 3 days end the week. That's how the business works. It's set up like that. And if you could stand back and look at it for what it is, instead of getting caught in your emotions in front of the screen, you could avoid 90% of these things on here. Right? The lot sizing is an absolute factor of the spreadsheet. You put in your account value, 2% risk, the spreadsheet tells you what your risk is supposed to be, period. And what your amount of money and what your front side is. And you start scaling that. I'm going to talk about the spreadsheet in the coming weeks. I'm going to put in the values. I'm going to put in 6 out of 10 trades and show you the blocks of 10, what that looks like. If you haven't seen the blocks of 10, if you haven't seen win the day versus win the trade, those are videos you need to watch. And I'm talking to the new guys, Chris, talking to newer guys that have had some struggles. All right, so let's get into the charts, man. This stuff was submitted to me. It's fantastic. Tell me everything here real quick. What do we got? Don't read this guy's card. Just in your mind, tell me what you see right off the bat. Back up and look at it. Mona Lisa, what do you see? All right, look, it's a perfect setup, right? Brinks, low of the day is formed in the shadow. Perfect. You got a W formation, shift through, right? We would draw a box right here. This would be our entry, looking for a retest into here. We don't get it. Okay, we get the shift, break above, close, held by the ketchup, tries to get through, pulls back. This is our first spot where we know we have a shot at getting in. Okay, so we're looking for an entry off the apex nativity thing. It doesn't deliver. We shift up to refine the entry after the first rejection point, right where this person drew the black lines. Perfect. Right? The problem is that was his stop level. So here you go. He's in on the high side. You're supposed to get in on sell limit orders on this bar right here. Okay, or the close of the hammer. You got to get the secondary rejection into the box that you draw, enter on the hammer or enter on buy limit orders going into the lows. Okay, if you're trading size, you got to scale it because remember tapering, looking at the candle bars, the stack bars, you got to scale it. All right, so if you're trading 50 lots, you got to go 10, 10, 20, or 10, 10, 10, 10, all the way across. You got to break it up. If you're trading 10 lots, go 3, 3, 4. Scale that in on aggregate because we know how the bars are structured, that it starts to get thin at the wicks, right? The wicks of the rejection area from the book, we know that's where you got to do it. Look, lo and behold, another setup right here. Okay, we're looking for the flip. We get it. We come out of this area. We get a rejection here. Railroad tracks is a pin bar on another time frame. Everyone knows that. They should, right? Here's your push through. Takes the book higher, pulls back. There's your pin rejection. Sell limit, buy limit orders in the box or close on the hammer. Spinning toppy hammered looking thing right there. There's another impulse. Okay, you measure this move to this move. You measure this move to this move. TP, good place is the mayonnaise to get out. So if you held here, scaled here, that's 2 good trades. If you traded here, got out here, entered here, got out here, it's 2 good trades. No matter how you slice it. All right, now what? Okay, guess what? Shadow box, red, vampire, bedtime. Get the hell out of here. Don't sit here and go, well, there it is again, Steve. I didn't get it, and I got stopped out. I held it to the end of the day. Degrading. Trade is degrading. The peak formation, first part of the day, trade 1, trade 2, degrade. You're not going to get 3, push, and all that. It's end of the day. Know where you are in the cycle. Understand what you're looking at. If you trade in Asia coming out of here, there's your hook back AR50 into the lows. That's a trade. You don't get the refined entry. I would have got left holding. I would have put a sell limit order there and stood there and not got filled. That's it. No trade for me if that's my cycle. Okay, and then what? How do you get a target? Measure this one, measure this one. They're going to be roughly the same. I'm getting in 25 pips off of there. right? How do I know? Because that's a 28 pip box. I'm getting a pullback, 20, 25 pips with the spread. Pay the spread on the other side. That's my target. I'm looking at maybe a 25 grab on there, 20. That's what you're supposed to be looking at. So if you wanted this trade, this is your lock, shift through, right? Readjust Asia. Readjusted Asia, the last part of the box right here. You get a break low, retest into. I'm looking for a refined entry, doesn't deliver, no trade. Then you get this perfect brink setup coming into London. You got two opportunities to take your money, not for them to take yours. You stop here, trade degrade. If you got stopped out on this shit and mad that you missed that, then you're sitting in here trying to get something, shame on you. You should be in bed. Go back to the rule sheet. That's why I want you to tape it on your forehead. All right, this was epic. This was sent to me from one of our students. I don't know if it's okay to say his name, so I won't. But look what you got. Tell me what you got, right? You got your push into the highs. I know I'm not giving you a chance. Tell me. Trap through yesterday's high, pull back, stay below, right? This is going to be your low side box, but we know about book. We can move this stuff up as it's developing, right? There's a flip, second leg flip. Okay, he gets the push through, eats up all the levels, takes out Asia, and he gets the pullback. Check this out. Mayonnaise, blueberry. Okay. That's an AR line. Look at this. If that's a zone I've ever seen one in my life. Right there. That's a zone, man. This is, right, a 50 bounce on a higher time frame because that's the 200. So this is what I was talking about on the bounce trades. If you got something here, look to your left for the first rejection through. Right? This is what I was talking about. You can make these bounce trades better. All right, so look, this is your zone. Right? You're including the AR number, you're including the two moving averages, and you're going to refine the entry right here. You're going to send this out, and you're going to go sell limit orders in the box. Or you can enter on this hammer, but I'd rather you deal from the box. I've talked about this all week, man. Somebody's dealing from here. Somebody's dealing from here. Somebody's dealing from here. Somebody's dealing from here. That shit drove me crazy for months and years and whatever, right? I sat in front of Bookmap and I handed it to you last week. Somebody's dealing from here. Why can't you deal from here? Who says you can't deal from here? Nobody. It's in your head. It's mental. Because nobody would sell a rising candle. That's some retail bullshit that they put in there for you. You can sell a rising candle if you understand what's going on behind the scenes. The backside of the monitor, how are they feeding it to you? They're feeding a big green candle to you. Who would sell a big green momentum candle, Steve? You would. I would. And if you don't, I want you to learn how to. All right, POC drill. We talked about this last week. Points of control. That's where the retracements are inside the bars. That's where the adjustment for finding the refined entry comes from. Because if you know where the POC is in a candle, the next opening occurrence will retrace into the point of control and reject out of there, giving you a refined entry. What's going behind the little line on a chart? The dealers are pushing and pulling orders in at that level, right? They're setting up for the bigger move through absorption and holding price in place with Bookmap, the stuff that we're going to talk about next. I'm not going to go over this, but this was submitted. This was exactly what I looked at when I gave you the 1 hour bar broken into 12. This comes from a guy that uses NinjaTrader in the group, and it's absolutely fantastic. I thought I would share it with you. Let me tell you what's so fantastic about it. These are the 1 hour bars. See the big outline? The 1 hour bars with the 12 5-minute candles inside of it. Okay, so you can see what's going on inside the 1 hours by broken down into 12 5-minute segments. 12 times 5 is 60, 60-minute candle, 1 hour. All right, and I think they're epic. So look, let's look at this together. When the price is outside of the real body or below the real body, it's the spike, right? It's the pin. So understand, when you get a pin right here, you happen to get a subsequent pin on the 5 minute. When you get a little tiny wick right there, it's a little tiny breakthrough of a pin. When you get a big one, you have maybe half of the stuff outside the real body. All right, so you got a nice size pin on a hammer going up, but it's red, and you have all these candles outside forming that pin. So what does that tell you? Okay, we know by looking at the 1 hour candles, price is dropping. So we want flat print, right? Forming out on a 5 minute chart is still an M setup. Where does the book flip? The book is going to flip here. The book is going to flip here. The book is going to flip here, right? Picture in your mind the stripes pushing down every single time, putting liquidity, pulling it, absorbing it, offloading it, picking up the orders, and suckering more people in to execute the wrong way, right? 5 minute traders go long here. We know that that's sell limit orders into the top side of this box right here where the book flips, right? And we'd be right. There's the point of control, high side. A lot of orders are flowing into the book. We can go sell limit in here and probably get filled. High volume, right? High volume to stop it here. High volume to stop it here. What does that mean when it stops it with a point of control? It's the highest volume exchange between traders and the dealers. The highest volume exchange on that candle at that print means that there was a lot of money going off. So you would have, when you look at the order flow numbers, the numbers will be printed. Do you need to buy these tools to understand it? No. We know that there's tapering when the wicks show. We know that when they're reversing the market or stopping a rising price, right? Think about this candle in 1 hour, what happened? Think about this. This candle is green. This candle was green. It was green. It opened, printed green for 5, 10, 15, 20, 25, about 30 minutes. It printed green, right? Then it turned inside out and trapped everybody high side. Why? Because everyone thought, oh, that's a W Steve teaches, for sure it's going up. Did you look at the 1 hour chart? Moving averages are crossed over to the downside, right? This could be a 50 bounce. It could be a 200 bounce. You got to use your head. You got to look at the background. What's going on in the background? What's going on in the background before I take this trade? 1 hour, 15 minute, drop down to the 5, get your entry. I mentioned this in January that you're supposed to be looking at the 15 minute and the 60 for directional bias, and it doesn't say is. And then you're dropping down to the 5 minute to refine your entry. That's it. And if you're using limit orders, great. If not, you use the second rejection into a zone that you draw. That's it. There's no other way, man. Okay, look, you're looking for a flip here. There's your V pattern. You're going to take this right here, extend it out into the future, and you're going to get the break below, the pull back into, and you're going to sell into this box. Stop loss above the box can be anywhere between 5 and 10 pips, and you're going to get about a 4-to-1, 5-to-1 risk to reward on that trade. Okay, you need to be trading 3-to-1 after you get proficient. I want you to start at 1-to-1 or 1.5-to-1. I want you to get in and get out and start making some money and get comfortable. Then I want you to immediately increase this to 1.5, 2, 3, and start ramping up. Then I want you to apply money management. I want you to do the assessments, all the drills that we've been talking about. That's how you get proficient, man. You think I didn't lose my account 22 years ago? I did. Read my story on my website. That shit's true. I was about to cry in the shower trying to figure out what the hell was wrong with me. And it was discipline, man. It was just discipline. It's a few adjustments mentally. The thing is, once courage is backwards, once you can make the shift and understand what you're looking at, and you can prove the model to yourself, when you understand what you're looking at and can prove it to yourself, then you have the courage to go forward. That's the problem. People get stopped out, they lose money, they can't figure it out, they don't have any discipline, they go through all these things. When you get past, what is it, 4 or 5 pay cycles? When you get past 4 or 5 pay cycles, you prove the model out to yourself. That's where you have to be. And the problem is you can't get full of yourself. You start taking out 25, 30,000 a month, then it goes to 50,000 a month. You have to start disciplining yourself. You can't get too full of yourself because you're not invincible. The business will cut you off at the knees, man. That's a fact. All right. So you have to stay disciplined. You have to stay, I don't know what everyone's different, man. Some people said they meditate. Some people said they exercise and burn off that extra adrenaline or energy. The best advice I ever got was don't look at the P&L, man. And I mean while you're trading with an open chart. Don't look at it. Every single tick you will feel against you and for you, and it creates emotion, and that's the problem. That's where you got to get it together, man. That's the stuff I can't help you with. Everyone handles that differently. And it comes from a long list of things that happened to you as a child all the way back to before you were 7 years old. I definitely can't help you with that. But you got to get that shit right in your head. Otherwise, you're going to struggle, man. Period. It's a fact. There's nothing I can do about it. And if your parents fought over money, if you ever got the electric bill turned off on you, if you ever were struggling on Wednesday, Thursday, waiting for groceries because your father or your mother had to get paid on Friday, these are the things that make you feel so emotional about money. They were ingrained in you as a young person. If your parents fought over school clothes, if they fought over books, if they fought over whatever parents fight over about money, man, if you lived through any of that stuff, you got to put it behind you, man. You got to make it right, either through your parents, through some therapy, something. The book that we're reading right now, you got to get past that, man. And I can tell you that 90% of the families that you guys are from, and I don't mean any disrespect of anybody, had problems like that. It's life. Okay? Sorry, Eugene, but it's just the way it is, brother. So look, man, these are the things I can't help you with. I could show you setups till I'm blue in the face. I could put those rules up for you. I could map this out. I could give you a spreadsheet. I could hand you an entry. I could hand you a setup. I could hand you all the stuff. But the problem is your deep-seated psychological stuff. I can't help you with that. I wish I could, man. I don't know if I have time to go back to school and become a psychotherapist. You think I could do it before I croak? And then we could put all this together, man. I wish I could help you guys on that level. I could point you in the direction of the books we're reading as a group and the stuff we're doing and all this mapping and stuff. You have to be very rigid in your scheduling. That's where this 12-week year stuff comes. That's from all this stuff comes from. Is from I was in a very rigid business. The only thing more rigid than what I did is the military probably. It's called a paramilitary organization. There's structure. There's a captain. There's a chief. You got to take orders. There's a lieutenant. You got to check your equipment every single day. You got to go through checklists and checklists and checklists. And you know what? Something happens and somebody dies and you didn't do your job that morning. That shit's on you, man. You pull out a heavy rescue tool and you run out of fuel right in the middle of a rescue because you only had half a tank in there because the other ship didn't fill it and you didn't catch it. That shit's on you. You killed somebody. You know what I'm saying? We used to have these things. They're Amicus tools, Hearst tools. Some of you guys were volunteers or know about the fire department a little bit. Stuff like that actually happened. Some person came in and didn't check the fuel in a little 3-horse Briggs & Stratton motor that created hydraulic pressure in the Hearst tool. Right in the middle of a rescue, it ran out. They had to go grab the gas can. Gas can was low. They poured in what they had. Person died. That extra 15 or 20 minutes getting that shit back running and finishing the rescue cost them their life. They bled out in the car. Those are the things that I lived through and saw and witnessed and understand that it's important to do your job. Your job is to make a good checklist, pick out a good entry, and execute. The numbers will flesh out, man. They always do. If you follow the spreadsheet, risk management and profit 2-to-1 minimum, when you get ramped up 3-to-1, 4-to-1, the numbers flesh out. Do the math, do the spreadsheet. And since I don't trust that you're going to do it, I'm going to do it soon. All right, another POC drill. I don't want to waste time. I'm going to get into the Bookmap stuff because I talk too much as usual. All right, so look, we're talking about this. This is the basic book mapping stuff that I had this slide up last week. I want you just to refresh your memory. This is typical setup, right? You got your formation here. This is a box up here, right? You have rejection high, orders in the book, the white stripe, orders in the book, right? The hook back right here, right? This would be an AR-50 trade. This is, if you look at this closely, there's a shoulder, head, shoulder. There's your flip through, shifts, takes out the apex nadery thing, pulls back in, you go sell limit in here. There's your first leg, there's your second leg, refined entry, right into an exit. Right, then you got another opportunity. Here's your first push. Look at this closely. This was the point I was trying to make last week. Look at how the white stripe is pressed right there, and right there. See these three stripes? That's the high. If you look very closely right here, you have black space. You have a solid white bar, solid grayish bar, and then you have a little tiny cone in there. Hope you guys can see that. So here's the deal. There's a wick in there. Price was absorbed through there, and that little sliver of orders got absorbed into the business, right? So now, if you take this box and this stripe right here, right, which would be an aggregate, look right here where this closed, an aggregate of the real bodies and the wicks that I was teaching you guys how to draw, right? If you look at that and you stretch it out into the future, you follow this like a box, stretch it out into the future and bring it back. That's leg one, that's leg two, sell limit in here, refine the entry off of the flip. There's a trade, boom, boom, out. This was probably a little micro trade, so you had trade one, trade two, or trade one and hold it into the lows. Right, then what happens? They flip the book off of here. Look at this little line right here. Look at this line right here. There, draw that like a box. Follow the stripes in the book. Trade one, or leg one, leg two. There's your entry into the end of the day. See it? It's right there, man. That's where this came from. Looking at these, they almost draw a box for you. Look, they box in the low side right here. Look at those. Look at the stripes in the book. I can't draw with this mouse, but look, I'm supposed to be here. Look, they box it in. Okay, they boxed this in for you. They boxed it in. So what happens? Failed auction to the upside. Sellers take the book through. They take out the level, absorption, repeat into the level, suck back. They always suck back into the level, man. Hit the stops of the people that sold into here. Trigger that. You understand? Chris, you got to watch the other videos, brother. You're like 3 or 4 weeks behind, man. Okay, so look. Box the swing points high, low on any time frame. I'm using the 5 minute for entry, the 1 hour for direction. I said it a million times. Okay, the failed auction side's got to be rejected. I showed you what that looks like in the book. We know what it looks like on a chart. It's pins. Got to see the pins, right? Why? They're trying to achieve absorption. What does the failed auction look like? There's going to be formations there that we're familiar with. Evening star, morning star, pin high, pin low, railroad tracks. Sideways print with a couple of spikes in them, right? Pins and pattern, right? FPP, formation, pins, and pattern. So a failed auction side's got to have FPP. Easy to remember. Write that shit down. Take a picture of this chart. Here, let me erase my ink. Take a picture of it. This is the setup. I'm handing it to you. The refinement of it. Price has to close above or below the range even by 1 pip. Okay, so if you box in an area, if you have price and you imagine the stripes in your mind and you box in an area, right? We're talking sell side here. Price fails on the upside, you can get a pin rejection, comes back through, it's got to close below here. Got to close below the apex nadery thing, or it's got to be closed through any structure on the chart. Once they close here, right, pin rejection high, close back in the range, pin rejection high, close up here, railroad track back in, or evening star back in. That's your anchor. Then you need a flip. You get the flip here when they close below here, then you need a pullback. AFP. Anchor, flip, pullback, execute. That's it. Pardon my writing, man. It's awful. All right, so now with that in the top of your head, let's look at this stuff. Okay? Asia, boxed in. It boxes itself in. It's an intraday safety trade, yes. Basically an intraday safety trade. Why? Because you're trading, you're not chasing the anchor high and the anchor low. The anchor's formed. They flip the book in your favor, you sell the pullbacks. That's it. Now you're not chasing broken M's and W's all day, freaking out. Make sense? All right, damn right it's interesting. All right, just kidding, man. Messing with you. All right, so look at the boxes. Look at the stripes where they were in the book. There's the volume. Look, you could box this stuff all day. Okay, where are we looking for? This is a little box here, but we're looking for the main box, right? Take this out. You know I can't draw. This is the worst box I think I ever drew in the history of teaching. All right, look. What are you looking for? Consolidation. All that volume changing, right? Pressing the levels. Failed auction to the upside. Draw this like this, look. I can't get it. Close below by 1 or 2 pips. Close below, they own the level. Back in, pull down, take out the level. You could have sold here as an AR50, right? We're going to take the high of the day and put the AR numbers on it. Is that a good level? Look at that block right there. Stayed in the book. That means nobody's getting through there, man. The volume stayed on the book. Okay, if you miss that, where's your next opportunity? Break below, pull back into, look over here for a pin to refine the entry, and it almost is there. Look, let me erase this for you. Hold on. Okay, look. It hooks back and pulls back. If you look in here, there's shadows right there, cones. So you would use this level right here and this level. And remember, we're aggregating the bodies and the wicks, right? And I want you to notice something too. There's your 50 right there, right? That is volume weighted moving average, which is a collection of price and closing price into a bounce trade, essentially. So the 50 EMA mimics VWAP. You don't need to buy it. You understand? Okay, you get your refined entry. Look at the shadows in there. There's your wicks. There's your tapering. Okay, you know that orders went off there. Somebody dealed from there and was stopped, capped right here, right? How do you know, Steve? Because the white stripe turned solid black in the book. When it turns solid black in the book, that means that the orders were absorbed. You had some absorption. You guys with me? I had to sip some Diet Coke for you guys. All right, man. Yes, I'm still drinking it. I quit for a couple years and I couldn't take it no more. It's almost like I don't know, a smoker. I get away from it and then get back to it. All right, enough about my personal problems. Here we go. Look, perfect setup. Okay, pullback, intraday safety, whatever you want to call it. Book flip. Candle overlays we talked about. All right, show me what you got. Yes. So the question was just put out. Are we supposed to recognize this just from the candles, not from the grid? Yeah. I am not telling you to buy this crap. I don't sell other people's junk. You don't need it. You need to understand what the candles look like when this is going. Okay, this is about $1,000 and it costs money for the feed. I think the price might even went up now. You don't need it. A couple guys in the group didn't listen to me, bought it, and it makes it worse. When you start looking at this, it'll drive you crazy because they spoof the book, they put orders in, pull them out. You're seeing after the market closed here what happened for the entire day, where the liquidity was and where it was pulled, where it stayed. If you recognize these patterns with just candlesticks and identify these refined entries, drawing the boxes off of the aggregate I've talked about in the videos over the last few weeks, go look at it. If you're behind or lost, go look at the previous videos. All right, mark this for me. All right, 30 seconds, mark it, go. Yep. Okay, a lot of you got it, man. This was an easy one, right? Look, that's basically a 50 bounce going down, but you're going the wrong way, right? This is your anchor low, right? This is where timing comes in. You got a nice vector into the low. You notice the pushes into the low, right? Shifts through, pulls back, shifts the rest of the way through, comes down here. Failed seller side. Sellers push the book. They get capped right here. This big stripe. They hold that level off. They shift through, pull back, You're looking for an entry off of here, right? You would draw that, and maybe you don't get it, so you would make your adjustment to refine your entry right there. That gives you the refined entry. So you look at this first pullback into the level. It's slightly off the apex nadir thing, but it's resting on the 50. So maybe you would adjust your box up just a hair using aggregate, tops of bodies, bottoms of bodies, and then you would get yourself a nice box drawn. That's your 1. This is your 2. Stop right about there. Okay. So if you count 1, 2, 3, 4, 5, 6, 7, the box is about 7, 8 pips wide. Cut the box in half, put a buy limit order, stop right below the box, 1 or 2 pips max. That's it. You get a nice push and a kind of a drifter. Doesn't really give you a payout till later in the day. But if you caught the absolute zero edge, you stops at break even and you just mind your business. That's it. Okay, and you got this huge break up here, and if you look, it closed above just a few pips to take out this level 2. But you want to get price above the apex or below the nadir. I know you guys don't really know that. I don't know what it is, but I really do. I just bust chops because I've been saying it like that for so long. It's habit now. All right. Yeah. Some people are saying they see this 6 or 7 times in a day. You do. Thanks, Sean. Appreciate it. I take it as respect. All right. So I'm obviously talking too much running out of time. I'm going to run 1 or 2 of the videos, see how we do. So look, I'm going to show you some videos of what's happening live in the book and what it looks like when they withdraw liquidity, put liquidity back in, and why you're a sucker if you're chasing the news, man. Here's the deal. There's unlimited opportunity in the business. It's an unnecessary endeavor, man. Right? There's several reasons why you're never going to get filled, and it has to do with the speed. When you see the speed of these moves, you're going to die. Time delay, and there's people in queue ahead of you. If you're a mouse clicker and not a limit order enterer, I don't know what you would be, a limit trader versus a clicker, you're not in the book. I'll show you how the book gets stacked, and it's thin. All right, so the orders on the book are limit orders, both long and short, stops, entry, take profit. We have no idea or no way to know what's sitting at those levels, what type of orders they are, but they are limit orders, and that's both long and short. I'll show you the profile doubled over. They're in queue ahead of anyone who clicks a mouse. So those orders got to get off the book, and then your click of a mouse that's 10, 20, 30 seconds behind, 2 minutes behind. I don't even know how long it would be, depending on where your dealer is and what kind of ping time you got. You got to have a really good computer. You got to have good packet speed. You got to have gig internet, and if you're clicking the mouse, you're still behind. Okay, the black lines in the book represent zero liquidity. The white lines in the book represent money in the book. That's what you're looking at, okay? Let me grab one of these things, see if I can play it for you without any issues. All right, can you guys see that clearly? There might be a little lag on it. Anybody, can you see it? Just yes or no. No, no one could see it. Okay, there. You only see the slide, no video. I wonder why that is. All right, let me try a different screen. If not, I'm gonna have to figure it out. Okay, let me bring it. Okay, can you guys see that? Okay, now it's in there? Okay. All right, so black stripes, no liquidity, gray, different levels. The white in this example is the highest. Remember Pac-Man videos, orders execute at these Pac-Men. Look, 3 versus 34, 63, 38. Look over here at the profile on the right. Okay, you got 57 orders, 10 orders, 1 order. These are contracts. Then you got a total of these, right? In the thousands. Liquidity available. See these little white stripes right there? That's what they call icing, right? It's iced up, the level's iced. Icing is hidden orders, man. You can't see them. It's telling you that there might be ice. We have no way to know what's actually on the book, right? You look up here, it's ice. See it? There's 130 contracts sitting there, but that comes from that dark pool liquidity stuff. Some of you guys know about it, don't know about it, doesn't matter. You don't need to know about it. It's irrelevant. Okay, but I want you to watch what happens in the next few minutes with this, and then I think we're going to end on this one, and I'll show you the next ones next week. I'm just going to be quiet, watch it, and I'll comment as I feel it needed. Okay, one thing I want you to notice. Notice how small the orders are. Notice how small the Pac-Man bubbles are. There's not a lot of liquidity in the book. There's all mostly black hanging around, all around price. There's not a lot of action in the book leading into the release. A lot of people know better, but most of them don't. There's 16 and 13 people that don't know better, right? Now there's 4 and 5. Anyway, you get the point. All right, so what did you just see? See how fast this went? Look at the size, man, that came in. You guys see that? 614 went off and you had all these small orders. They basically sucked up all these orders instantly. They dropped price right back down. So if you're in queue, if you're not in the market right here, you ain't buying and selling into these levels. You ain't getting off. All this volume was on the book. And when they flashed it, you clicked the mouse, maybe you went long at the top, whatever your thought process was, they swiped it right back. They have a bunch of buyers came in, they soaked it up, pulled it right back. It hit this number in the book and this number in the book, and they got full absorption of that level. If you notice, it spiked really high, rejected by 614, pushed it right back down. So if you were long here and you wanted to get out, chances are you did not get out. You got out back down here. Then maybe you had a second pass if you stayed in with no stop. A lot of people do that. They trade news without stops. Right? It's a 50-50 shot. 50-50 shot to get it right. I'm going to end it here, man. I'll pick up with these videos. I got 2 or 3 more of them to look at next week. It's 8 o'clock. I want to be respectful of your time. I know it's like I could do this all night. I love this stuff. But anyway, we'll talk about it more. Okay. Yep, Sean, nice. Appreciate it, man. Helena. Sharma, yes. Emmanuel, Don, thank you guys, man. So listen, new guys, Chris, go back to January, first week of January, brother. All right. Chris, don't buy any tools, man. Don't buy any tools. Everything that you need, I gave it to you in the videos. Go watch them. JR, I don't know. I'm sure it is. Don't worry about it. We'll figure it out, brother. I'll write you back. If you don't get it, you tell me and figure it out. All right. Don't spend money on the tools. I'm showing you what the tools did. I already spent the money and spent the time on them. I'm showing you why you don't need them. That's what we're going through. Chris, if you go back since first week of January, I promise you'll get caught up, man. And we reached out to each other. I know I missed you a few times. So now I'm telling you, I was going to tell you this anyway. Go back first of the year and start the videos. Get caught up and then come back in here live and keep up. We're on a new 12-week cycle. Everybody, new 12-week cycle started second week in January when I came back, and we're working through in order. Understanding the levels, how candles are tapered, what the order flow looks like, how to understand the M's and W's are confirmed. Okay, so the question was put to me, oh, your stuff doesn't work anymore? Of course my stuff works. New technology, things have changed. I've been in the business 22 years. You think I'm still looking at the basic stuff that I was taught 22 years ago? I'm advancing with technology. I'm not using a CRT that I used to use, a green screen with green prints. I'm using 4K monitors now. So of course, I'm advancing the ideas, evolving. Everyone should be evolving and growing mentally and physically and all that stuff, always. That's the whole point of living, right? Just keep growing and doing better for yourself and for the people around you. You guys should have that, adopt that attitude, and you'll be in a good place, man. Just always try to be better than you were yesterday, for what it's worth. It's my 2 cents. All right, man. Appreciate you guys. Thanks for coming. If you can't tell, I love this stuff. I'm a little excited about it. But anyway, we'll talk about it next week. A couple more videos. We'll go back and look through some setups in the book, and I'll show you some more news releases. I got some that are really volatile. This one was mild, but I just wanted you to see what's going on. That's why you ain't going to get a news order off. If you notice the black in the book turns black. Then you got big, huge orders when the dealer caps them and takes everybody's money. All right, guys. Good night. See you next Wednesday.